The young generation, they love this. Like 65% in this survey I saw of Gen Z investors say they want fractional mobile friendly investments. They don't want to own the whole thing. They don't have the money. Gen Z is kind of messed up with how much money they have. And so the short story is they want fractional ownership. They still want to own things, but they can't do it the old fashioned way. And so you can give them this, but with tokenization, it's safer and can be more regulated than fractional ownership of shares. Oh, hello. Welcome back to another episode of Advisor Tech Trends. As always, I'm your host, Massimo, and today I've got a really cool one, something I'm passionate about, been reading a lot about over the last little bit. I'm calling this episode, What the Heck is Tokenization, and why advisors should care about it. So here's a quote I really like that I've heard people say. If ETFs unlocked Wall Street for Main Street, meaning most clients now buy, or many people now buy ETFs, and they couldn't buy stuff like that before, tokenization is going to unlock everything else. So today we're going to talk about one of the more buzzed words, misunderstood, maybe most important thing in finance in the coming, 30, 40 years at least. It sounds like a crypto word. In some ways it is, but it's not like some crazy crypto screen theme or anything like that. It's about turning anything of value into something that can be traded digitally. And it could change, honestly, how we invest, how we trade, and what your clients expect from you. As always, please like, comment, subscribe. I love hearing from all you guys, and I'll see you in the pod. Okay, so let's start off. What the heck is tokenization, right? In its simplest form, tokenization really just means something real, like a building, a bond, even a painting, and you break it into tiny digital Lego pieces called tokens. And so why is that relevant? So picture this. Imagine, $10 million office tower in downtown Toronto, right? Typically very inaccessible for the average investor to even invest in. Like, you don't know the realtors, you don't have a commercial brokering license, you don't know any commercial brokers, etc. Normally, only a big institution could buy it. And there's a lot of demand, or well, at least there's a lot of supply for that right now. And to meet that supply, you need demand. And the average consumer can't purchase that, even if they wanted to add it to their portfolio. It's typically not accessible. And so tokenization allows you to split that tower into, for example, 10 million tiny little pieces, each a buck, right? And so those pieces live on something called blockchain, which we're not going to get into a ton today, but this is how it was able to do that. Because in a nutshell, you have to be able to prove that this person owns 10 blocks and this person owns 11 blocks, and it needs to be managed through some type of digital ledger, which the blockchain is. And it's non-hackable. You can't change it. Whatever's in the blockchain is true, which is also important. At scale, to be able to tokenize things, you need to have that. So basically, it's a digital record book that everyone can see, but no one can fake, right? And so if your client owns 1,000 of these tokens, they technically own a small piece of that tower. And now they get access to assets that they didn't have in the past. And so it started off a long time ago with like crowdfunding and ideas like that. And it was a way of giving away equity to people in a crowdfunding manner. You give me $50, I'll give you some equity of my company, a very small portion. I'll give you first dibs at the company. And companies were able to raise a ton of money. When digital coins, specifically blockchain through Bitcoin, came out in 2010, this type of stuff started showing some interest. People were thinking to themselves, okay, if we can create a digital ledger that is self-sustaining, that you can't fake, couldn't we tokenize anything in the world? Like, why do I need to have 100% ownership of this asset? I probably don't want to. And with many owners, it could go up in price. But how do I manage the overhead of all that ownership? The blockchain solves that, right? So these tokens can be bought, they can be sold, they could be tracked instantly, kind of like buying shares on an app. They have fractional trading on apps now, but with real world assets behind them. So it's a pretty revolutionary thing. And if you zoom out, it's like giving every investment a barcode that can be scanned, verified, and traded instantly. And so why is it a big deal? So fractional ownership, let's break it down. Like clients can access things that were off limits: luxury real estate, private credit, art, infrastructure. Instead of having to have 500K to invest in some infrastructure, they just need $500. It levels the playing field, and it actually allows more people onto it, which increases the asset value in the end. The second big thing that I see a lot of people talk about is it's instant. And so there's no brokerage in between. There's no 2 business days or even 1 business day or even 1 hour. You can trade almost instantly. Typically, a trade takes 2-3 days. Tokenization and buying a piece of an asset through the blockchain is seconds. Money and ownership can switch hands at the exact same time, no waiting, no middleman. That also means lower fees, again, adding to the value of the underlying asset. Probably one of the neatest things it does is it allows liquidity for non-liquid assets. And so, like, for example, private funds or REITs, you get locked up in those for years. If you give your money to a private fund or a REIT, you typically have to have a holding period of 2 to 5 years, right? And you don't see your money, and then you may lose it all. If you tokenize things, people can come in and out instantly. And that unlocks a lot of things. They can sell portions of their investment earlier. The more flexibility you can give to an investor, the better, right? And through peer-to-peer selling these tokens, that's massive. And then probably the biggest thing that I personally like, and I've been going down this journey a lot lately, is transparency. So every transaction is visible. So for those of you that don't know about blockchain, essentially what it is it's a ledger, which the bank holds, which everyone holds. Basically, when I buy something, it's broadcasted. When someone else buys so I sell something, it's broadcasted, and the person that buys it is broadcasted. You don't necessarily know who that person is unless you do a lot of thinking and research, but the short story is it's all public. So you can see everything moving. And with blockchain, which we won't get fully into, you can't change that. Once a trade is settled, it is permanent forever. That's massive transparency. There are so many cases where you're investing in people that are being illicit, or people that are lying about their books, or people that are on their last leg and they don't tell you. And so that changes because now you can move in and out instantly. You can see who's buying. If they say, oh, we're 80% sold, you can look and only 20%, right? So that just creates a more transparent market in general. And in general, you're probably noticing with the younger generations that this whole black box idea where it's like, here's my money, grow it for a year and I'll talk to you. That's changing. The trust factor is changing with the speed of the internet, the speed of decisions, the accessibility of information. People are being much more strict on how quickly and how transparent you're being. And if you're not quick or transparent, they're going to move on. And so you're seeing it in every part of the investing world and the insurance world. Premiums and commissions and all of that are starting to be shown. On the investment side, you have to show how you're making money. People are demanding transparency. It's no longer my money guy grows my money. I don't know how much he makes. That is changing. And so that goes into the investments as well. So here's some real world examples. I wrote these down just so you kind of know some big players are talking about it. So BlackRock, the CEO, Larry Fink, which is like the biggest hedge fund in the world, basically, a private equity. He said the next generation for markets, the next generation for securities will be tokenization. Robinhood, which is like Wealthsimple in the States, much bigger, their CEO, all financial markets will eventually move to tokenization. Here in Canada, we're piloting it. We're testing it. In the US, JP Morgan has already tokenized repo markets, moving billions daily onto blockchain. Conquest, Canadian financial planning software, is exploring tokenized advice workflows where client data and rights all have tokens inside. So the point is very large players are starting to work with it. And the reason is, like, they're not doing it for fun. They see these benefits. And if you tokenize every ETF or every building, or if a REIT tokenizes everything they have, this like 10x's the potential value with the amount of people buying it, right? And so there's a ton of money sitting on the sidelines that they can't access because it's too small. But in great quantities, it makes sense. And so why should you care, right? Like, I mean, a lot of advisors, I don't even think, dabble with this. They don't look at it. Here's why I think you should care. Number one, you should always be looking at new products and opportunities. You could soon offer clients fractional exposure to like high quality real estate or private debt, like through REITs, things like that. You will see tokenized ETFs and tokenized funds very soon. where people can buy fractions of it. As I was saying earlier, the young generation, they love this. Like 65% in this survey I saw of Gen Z investors say they want fractional mobile friendly investments. They don't want to own the whole thing. They don't have the money. Gen Z is kind of messed up with how much money they have. And so the short story is they want fractional ownership. They still want to own things, but they can't do it the old fashioned way. And so you can give them this, but with tokenization, it's safer and can be more regulated than fractional ownership of shares. Efficiency. That's going to be the name of the game over the next little bit with AI. Like, you have to be efficient with all of your processes and what you offer clients. You can't have multi-day settlements. You can't have wire fees or lost paperwork or nonsense. It needs to be instant, needs to be logged, and needs to be verified. And blockchain is solving this. And so you have to come to terms with it and understand it. And then transparency. You can show exactly what the client has. Any client in the world could go see what your client has. Technically, it's kind of harder than I'm making it sound. But the point is, it's public, and that creates a ton of value. So, like, new products, it's fast, it's efficient, it's transparent. It'll open up your door to a lot more new clients. There's a lot of wins there, but there are a lot of watch outs, right? Regulation's still a work in progress. In Canada, tokenized assets are still treated as securities. So it's the same hurdles that you have with security. So you may not have the right licensing and things like that. Just because it's tokenized, this is something I see, it doesn't mean that it should be or that it should sell. And so it depends on the market. It also depends on the asset. Like, you can't tokenize your bicycle. I mean, you could, but like, there are certain limits, and people are going to be a little weird with it for a while. But keep in mind, this is where we're going. There is kind of a caution on the custody and security. I won't get into it now, but in order for tokenization to work, you have to own a private key to unlock that token so you can buy it or sell it. That is usually too complicated for the average investor, so you have to custody it with someone, whether that be Fidelity or whoever. And so there is a bit of a hurdle there. I think it's a very surmountable hurdle, but you should keep that in mind. And then client confusion. Like, if you say tokenization, some clients might be like, you're a crypto guy. Not necessarily. Like, the way I think of it is there's currencies that are cryptographic, like Bitcoin currency, like Ethereum, Solana, all kinds of different ones. But then there's the underlying technology, which is blockchain. And that's what this uses. So blockchain is the technology that allows things to be fast, allows things to be transparent. And then people put a token on top of it to get adoption. And so the short story is, you have to be able to understand that to clients, understand and explain that to clients. And it's not an easy thing. And I'm not trying to get everyone to start selling tokenized assets, but I think you have to realize that we've got technology in such a place where you can tokenize a building. In the next 2 years, there's going to be all kinds of tokenized stuff. And so you don't want to, or you do want to be able to have meaningful conversations with your client about that. And so it's not just about chasing coins or anything like that. It's about moving value faster and cheaper. And that's the name of the game, especially with AI. AI is going to do a ton of stuff. You have to be ready. And so how can you prepare? Learn the basics. Learn about blockchain and smart contracts and custody. If I were to start, I'd do blockchain and custody. Just learn about that. That's basically the technology and then how you access that technology. In a very simple term, blockchain is just a massive ledger of every transaction happening. And think of it like a lockbox. There is money behind every lockbox in the bank. And you have a private key to unlock the lockbox that is yours. That is the custody component, the private key. And if you lose that key, you lose the money, which is why some people have the key with Fidelity and stuff. So there is a piece there that you need to understand. And then there's a piece, which is the blockchain, where everything is perfect and immutable. You can't change it. Keep an eye on regulation. It's coming. Things are going to get tokenized. Only choose regulated and proven tokenized platforms if you are going to do it. Start using it as just an education topic, right? Don't use it as an investment, but just talk to people or go to conferences, learn about it. It is coming. I mean, at the end of the day, when ETFs showed up, people said, who would ever trade funds like this? Like, I've got my mutual funds, I've got my stocks. But today, they're a massive market. I think tokenization is going to be similar. So you just got to be prepared. As always, thanks for listening to Advisor Tech Trends. If you think this was an interesting episode, please like and comment, and I'll see you in the next one.